Hello, everybody, and welcome to episode 18 of Bank to the Future Live. I am here with a very special episode of Bank to the Future Live. We're mixing up the format today because we just sent out an email announcing something that we're really excited about. And I've got Andrew Gazdecki here with us live, who is the founder of altcoin.io. And he's going to introduce himself quickly. And I'm going to go over to him shortly, and we're just going to have an off-the-cuff, fireside chat about some of the things that we've been working on, how we met each other, what technology they built, where that fits into what we're up to at Bank to the Future now, and just have a general chat so that our community can stay up to date with what this means. Just before we do that, I just got a few special things to cover off before we get into the bulk of it. Firstly, today we're about to hit the 24-hour countdown for the Kraken pitch. We're approaching 2,000 investors, which is a record at Bank to the Future. So we're really excited about the level of interest and the level of diversity of investors that are going to be investing into the Kraken pitch, and it almost always gets the most amount happens in the final 24 hours, especially as people are waiting to invest right at the last minute, which tends to always happen with the deals on Bank to the Future. Also, if you want to ask any questions, we've got a couple of ways in which you can do that. The first is there is a live chat under this YouTube video. Please do use the live chat. We got Irvin moderating, and Irvin's going to be picking out some of the questions and trying to filter through some of the noise and just pick out the things that we can try and get to in the Q&A session at the end. Also, if you use the hashtag BF Live on Twitter, that's BF Live. BF stands for Bank to the Future, of course. We can try and pick up some of your questions on Twitter, and also the Telegram community. If you're already a member of the community, we'll try and add some of the links. Perhaps Irvin can add some of the links in the live chat and in the description for those that are watching the recording. And then the final thing is, do please like this video, do please share this video, help us reach new audience, and it also we go live each and every week at the same time. We've only missed one episode due to a glitch with Google, but we're also looking at how we can stream these across multiple mediums. I just started for the very first time giving some live broadcasts on not YouTube Live, Twitter Live, which I really enjoyed, and they got really high level of engagement. Was discussing Facebook, financial crisis, various other things in terms of the cryptocurrency they're about to launch. So do check those out on Twitter. But also underneath this button, hit the subscribe button, and remember to hit that bell, because when you hit that bell, it means YouTube will email you every time we go live and as we add new videos. So that's all the housekeeping things. Irvin will be listening in, and he'll make sure if there's any issues, you can't hear me, the internet goes down or anything like that, then he'll let me know, and we'll try and figure out a recovery plan. But now I wanted to just go straight in to discussing with Andrew a little bit of background on altcoin.io. So Andrew, welcome, and thanks for being the very first guest, external guest that we've ever had on Bank to the Future Live.
Wow, I'm the first guest. Well, first, thank you for having me, and hello to everyone's watching. I'm excited for this conversation, and known you for a bit, Simon, so ready to kick this off.
Yeah, so why don't we start at the beginning of altcoin.io? So, give us a bit of background. What is altcoin.io? What was the original vision? How did you decide to start it? And what were you looking to achieve?
Yeah, I'll start with how we started the company. So back in 2017, when we saw a huge increase in attention, and there was a lot of craziness going on in the cryptocurrency space in that time, I actually sold all of my Bitcoin, Ethereum, and used the proceeds of those funds to launch Altcoin.io. So that was a couple 100,000. And the idea was we wanted to get involved and really build something that was a benefit to the cryptocurrency community. And at that time, a lot of the trading was being done for altcoins on Polonium X, and there's a lot of complaints. And so I assembled a team and said, let's take a crack at trying to build a next generation exchange. And specifically, what we were trying to build was a non-custodial exchange where users are truly in control of their funds at all times. And we did a lot of research on atomic swaps. As a team, I believe we completed the first Bitcoin to Ethereum atomic swap. We also did a lot of research on state channels and plasma, which are layer 2 scaling solutions on the Ethereum blockchain. So, long story short, I'm an entrepreneur. We built this company to give traders a safer way to trade different cryptocurrencies, all secured by the blockchain. And definitely excited for the next chapter of Altcoin.io.
Awesome. Okay, so I believe that was when we first met, because if I remember back to 2017, atomic swaps were getting a lot of attention because they were meant to be one of the promises for how you disrupt the centralized exchange models. We are, one of our portfolio companies is Shapeshift, and Shapeshift at the time built an incredibly easy service whereby you could take one cryptocurrency and through integrations with lots of different exchanges, you could exchange it out to a different cryptocurrency. One of the the original bits of volume that Shapeshift got is, I remember it was a very niche company when we first invested, when we first did the funding round. And it was, very hard to find because all the volume was in Bitcoin. But suddenly Ethereum came along, and there was just this ginormous spike in attention, and it was just the easiest way of converting Bitcoin to Ethereum and Ethereum back to Bitcoin. And altcoins suddenly became a thing, and volume started to catch up. And if I remember correctly, there was a lot of talk about atomic swaps. And I think you probably were the first team that I ever came across that actually executed one. And I think that's where we first met. Maybe you could talk a little bit about the atomic swap, the promise of it, and what you learned from being the first to build in that area.
Yeah, definitely. That is how we met. We pushed out a release about our atomic swap wallet, and I believe we connected over that, and we've been in touch ever since. But that's where we started. We started with atomic swaps, and atomic swaps are a great way to trade in a trustless manner where there's really no middleman involved. It's between two parties, and essentially you're able to exchange tokens without having someone in the middle. And there's a lot of benefits to atomic swaps. But one thing that we noticed after going down the path of research with atomic swaps was, due to confirmation times on the Bitcoin blockchain and the Ethereum blockchain and other blockchains, atomic swaps can sometimes be a little bit slow. And when I say slow, sometimes up to minutes. I know a lot of other companies are researching ways to increase that speed, but our goal is really to build a scalable and an exchange that could essentially compete with centralized exchanges. And a big part of that is delivering really fast trading speed. And so at a certain point, we made the tough decision to move away from atomic swaps and focus on layer 2 scalability solutions so we can have a non-custodial exchange that performed just like a centralized exchange, one that had a beautiful user interface, ones that executed trades in seconds rather than minutes. But that's where we started. We started our research with atomic swaps. We had a large amount of positive response from the community regarding that. And even as we moved over towards a layer 2 scalability solution for our exchange, we even open sourced our atomic swap wallet if anyone is interested in checking that out. So yeah, that's where we started.
Awesome. Yeah. So I remember atomic swaps. Prior to that, I think the thing that everyone was really looking at was sidechains, and sidechains was really the promise of scalability. And then atomic swaps came along as an innovation that you guys built upon. You ended up open sourcing that. And then we started entering into the promise of Lightning Network with Bitcoin. Turns out that it took a lot longer, and we're still at its infancy, but
Yeah,
now it's starting a lot of attention now.
I want to add a comment there. So that was one of the reasons why we switched to research into layer two scalability solutions. I think we were a little, we anticipated Lightning Network and sharding to be released on the Ethereum network and the Bitcoin network to address the scalability issues a little bit sooner. But we've seen a lot of development from both of those. But yeah, back a year and a half ago, those were the two things that we were hoping would be released sooner. But obviously, in blockchain development, these things take a lot of time. And so that was the reason for the shift over towards research into layer two scalability solutions.
So that led you to Plasma, which my understanding of Plasma is that it was attempting to do to Ethereum what Lightning was doing to Bitcoin. Is that a fair assessment of what it does?
Without getting too technical into how Plasma works, essentially, yes. It's a framework for building scalable, decentralized applications on the Ethereum blockchain. And the best analogy I can give around Plasma is essentially if you're on a highway, it allows you to basically take all of your transactions over to a side chain. So it's kind of like a pit stop off the main Ethereum blockchain, have all the trades conducted away from the main Ethereum blockchain. And then once everything is confirmed and is accurate, those are then put down to the main root Ethereum blockchain.
Okay. Then Plasma suddenly went very quiet. I didn't really hear much about Plasma. In crypto, you notice that we go through these trends, and one of the really challenging things is getting very excited about something, building on top of it, and then something comes along that almost disrupts it within a 2 to 3 or 6 month period, and a lot of the attention is then diverted to something else. And it's one of the constant challenges, the reason why we're always investing in a very diversified pool, and we try to bring diversified opportunities around here, is because everything it's very hard to navigate the fast moving environment. But I think then the next thing is I think we hit the ICO wave, and tokens being built on top of Ethereum became, started to cause lots of scalability issues. And one of the early, I think ERC20 was the standard that started to popularize the ability for people to sell tokens at a large scale. And one of the early token sales was something called the OX protocol. And I believe that this is where you ended up diverting some of the attention for Altcoin.io. Could you share a bit about what happened after Plasma?
Yeah, so as we continue to research with Plasma, there still is a lot of debate on the correct structure of how Plasma can be used to build a decentralized exchange. And so as a team, what we did was we felt that we weren't quite sure what the ultimate layer two scalability solution would be. Would there be something new in 6 months? Would there be something new in 12 months? And so what we did is we diverted our development over to 0x. And the reason for that was simple. It was 0x is a platform to easily build decentralized exchanges, but you also get the support of their team and their research and development. And I actually met with that team in San Francisco at one point, and we discussed how they were addressing scalability issues. And they've been pretty pretty good at updating the community in terms of their progress on scalability. And they're now working with something called ZK Snarks, which they hope to have released on mainnet. And when that happens, we expect to really achieve that scalable decentralized trading that we really set out to build from the beginning. So that's something we're really, really excited about, and we're hopeful to see by the end of the year.
So one of the reasons why I wanted to keep Andrew and his team really close and we developed a relationship is because it's so hard to stay on top of all these things. Our full-time job is to stay on top of the investment opportunities. At the same time, we got a massive job with compliance. And then to try and stay up with all the technological innovation, the entire world building upon these permissionless blockchains. It really is a tremendously exciting thing to be involved with, but at the same time, incredibly overwhelming. And you've got to keep people, close to you that are really looking into these things. And so I hope you can see from this that Andrew and his team were on top of, probably quite a few trends ahead of their time. From atomic swaps to level 2 scalability solutions to different protocols that are building for decentralized exchange, all with the goal of essentially allowing people to be able to trade, but at the same time hold their own assets so that you're not at the mercy of middle people. So I guess the next thing that came along after that was, I guess, bringing it to the regulatory challenges that came next. So the SEC started to get very aggressive in this space. And one of the pivotal cases was around a decentralized exchange called Ether Delta. And Ether Delta was actually, ended up in some challenges, personal liability, or I don't want to go too deep into the legals in the case. But I think that was a really probably changing time for many people that were building these decentralized exchanges. Could you share a little bit about your reaction and what you learned from the Ether Delta case?
Yeah, absolutely. So Ether Delta was a great example of how the SEC is viewing cryptocurrency exchanges. And so in order for us to launch, what became apparent, and a lot of this is still in legal gray area. And I say that because you see companies like Binance or Bittrex delisting a number of tokens, or Binance essentially leaving the United States altogether. And what that causes is a lot of complexity. And in order to compliantly launch an exchange, takes a lot of time, a lot of resources, a lot of legal work. And that was definitely a big challenge while building our exchange. So as a team, we were always focused on the technology as our advantage. But then, yeah, once Ether Delta hit, that basically forced us to shift our focus over towards how do we compliantly launch this exchange? Because that's something we wanted to do from the beginning, and something that also really attracted us to Bank to the Future was your focus on compliance and regulatory, um, having all of that understood and making sure that when this exchange is launched, it's done in a compliant and regulatory manner. And so, yeah, that was an interesting event. And that definitely sent shockwaves through the cryptocurrency industry about what is a security, what is not a security, how is it defined. And there's still a lot of debate around that topic today. That was definitely a hurdle in terms of actually launching our exchange. Um, Without going into the specifics of what is required to launch a cryptocurrency exchange, our legal team essentially let us know that it's probably going to take 6 to 12 months for the proper regulatory licenses. And then on top of that, the cost of that can be in the upwards of hundreds or potentially millions of dollars. And the unfortunate part of that is it really slows down innovation for smaller startups that may not have the capital or the time to really navigate this complex and confusing regulatory landscape. And so, yeah, when that event took place, that really was an eye opener that the SEC is really looking to ensure that exchanges are operating compliantly and following all regulatory laws. which is a good thing in my opinion for the cryptocurrency community. It really helps protect investors, but it did definitely bring a new barrier to entry, so to speak, to the exchange market.
Yeah, so and it's a very interesting topic when you're involved in the cryptos, because I came at this, when I first got involved in crypto, I came at it from the angle of how this is going to reform the banking system. The banking system I consider to be one of the largest, the largest regulated Ponzi schemes that we've ever seen in history. And so when I came across Bitcoin for the first time, it really pushed several buttons. So at heart, I'm a Bitcoiner, but at the same time, when we're building businesses, I'm not Satoshi Nakamoto. I'm not anonymous. I don't know how to keep myself anonymous. That's what the unique value proposition that Bitcoin brought to the world. But at the same time, it brought a mountain of entrepreneurial opportunities for entrepreneurs to build financial technology built upon this apolitical, technology that is kind of like a bank in a box. And so when you are a company that's looking to build on top of this technology, then you have a duty to actually keep yourself here. And the only way to do that is obviously to comply with all the laws. Now, the challenge with that is that it's one thing to comply with one country's laws, but to comply simultaneously with global laws. And not only that, you've got a constantly changing regulatory environment. The SEC has not figured out they believe that, many of these cryptocurrencies are securities. The IRS believes that they're money. The CFTC believes that they're commodities. And this is just a massively changing environment. That's just the US. Take that to all the different jurisdictions around the world, and you have this immensely, challenging environment where, many teams, and we deal with it because we've invested in so many companies and we're so diversified across the industry. Many people came at this, because they wanted to build game-changing technology and found themselves in a compliance business, not necessarily prepared for that challenge. And so I'd say that we did come from that. We wanted to build game-changing technology. I came from a banking reform mission background. Our team originally came from that, but because we started that way back in 2010, we've essentially had almost coming up to a decade now of navigating these constantly changing regulatory environments. And so because we ended up focusing so much of our time and attention in making sure that we can bring these investment opportunities to investors that are actually able to invest in these asset classes, because we started as a securities business primarily. We started there, and then all of this disruption and change happened along the way. We weren't necessarily at the cutting edge of the technological innovation. So when we saw what you guys have been doing, staying on top of the technological innovation, and doing really massive R&D efforts ahead of its time, and yet we'd focus so much time in the compliance efforts, I think we both saw a tremendous amount of opportunity to actually merge, I guess, those two pieces of technology that you've been building over the years and plug it into some of the compliance systems that we built over the years. So I think it's created really kind of a perfect storm in terms of these different things. And so that's why I think we got talking about this deal.
Yeah, exactly. And I like how you phrase that too, where truly when you launch a cryptocurrency project, part of it is technology, a big part of it. But then sometimes you find yourself in a situation where the bigger part is the compliance and the regulatory approval process. And the fact that Bank to the Future has been spending the last 8, 10 years really navigating this confusing and complex and constantly changing environment, I think is just a testament to you, Simon, and your focus on really ensuring that people are able to trade these different types of security tokens, but ensuring that it's done in a compliant and we're not breaking any trading security laws, which is extremely important.
Yeah, so that brings us to, I think, another part of the story just before we get to future and the next chapter. So I think one of your first reactions was to actually, and this again was why altcoin.io was just such in an interesting position in terms of synergy and serendipity, is because one of your reactions was to actually take the platform. And if you look at altcoin.io right now, it's very much pitched as a white label platform. So I think you took the technology and decided, well, maybe your technology could be used by other companies that are looking to, they've got the licenses, but then they want to actually get into the future of finance and the self-custodial space and all the benefits that come from that. So you actually had already started working on how you could adjust the technology you built to a white label model. Do you want to share a bit of the thinking and some of the challenges around that?
Yeah, absolutely. So one thing that we really had to think about after the Ether Delta news hit, after we had consulted with our legal team on exactly what would be required for us to launch our exchange, everything from registering as a broker dealer, getting an alternative trading license, registering as an MSB in every state, hiring a chief compliance officer, all of this really increasing the capital requirements for us to launch. We knew we had really great technology, and we knew if we found the right partner on the compliance side, we can really build something great together. And so that was the thought behind the white label strategy. Was we have built really great blockchain trading technology, and we're constantly looking for ways to improve it. We're always trying to stay ahead of the trends. But on the compliance side, that was an area we felt where we needed to find a launch partner, find someone who already had the correct legal framework in place, because it was extremely difficult to build the technology and then build the regulatory compliance framework that we needed to launch without having essentially millions of dollars in our bank account to do so. So that's why I think this is a win-win for both of our companies, where we get to see our technology live on through Bank to the Future, but launched in a compliant way that is addressing all of the regulatory framework issues that we just weren't able to figure out. And then also on the technology side, we've built really great technology, and we can actually see that go to use. So we're really excited about that.
Awesome. Yeah. And I think that probably brings us right up to date and where we are right now, really. So at Bank to the Future, obviously, starting way back in 2010, we were involved in many of the changing laws and lobbying to increase who can actually invest. That led to things like the Jobs Act and various other things that have happened over the years by focusing on the security side. Couple that at the same time, the crypto industry became so disruptive in so many ways, and with the ICO boom, became this incredibly disruptive force in capital markets. And then all of the rage this year or 2018, the whole world suddenly starts thinking about cryptocurrency and securities. And suddenly, this thing that we've been involved with, starting off with something that just nobody was interested in investing in, equity in companies that were building, in the crypto industry. Suddenly, all of the investment banks around the world, all of the brokers around the world, started wanting to be involved in the securities token industry, taking the promise of blockchain technology and these different protocols, and then putting them into assets. So maybe you could share a bit of your thoughts around the securities token industry and where you think it is and where you think it's going.
Yeah, so we've always been very bullish on the security token industry. Just the thought of being able to take real world assets, whether that be stock or real estate, and fractionalize that into a way for investors to invest in and have custody of those tokens was something that was very, very appealing to us, and we think has a very, very big future. But one thing that I think a lot of companies are doing incorrectly, or maybe not incorrectly, but a good approach to this market is to really focus on the cryptocurrency industry first. One of my favorite quotes in business is, one of the hardest things to do is to change customers' how they basically interact with certain types of products. So people are used to trading stocks in a certain way. People are used to investing in real estate in a certain way. And so changing this consumer behavior is one of the hardest things to do, especially for people that aren't involved in the cryptocurrency industry. And so the way that I see security tokens going is, I think we need to start with the early adopters. And what I mean by that is focusing on companies that are crypto related. So you can invest in these companies, you can receive a digital security token for your investment, and then having the ability to trade that on a secondary market. I think that is really the start of how we're going to see security tokens really grow as a asset that people are willing to invest in, by starting with the early majority, people that are familiar with cryptocurrencies, how this type of technology works, and then use that as an example to move upwards into larger and bigger markets. And the opportunities are essentially endless in terms of the applications that security tokens can be used for. So that's one area that I'm really excited about, and I've written about it a few times, and I'm definitely really excited to see just what comes out over the next 2 to 3 years in terms of security token tradings, custodial trading and non-custodial trading of security tokens.
Yeah, and certainly at Bank to the Future, we've looked at take a similar approach of we had to create a market of people investing in crypto companies, and that was a really slow, hard thing to do. When we originally started, we had to, we were registered with whereby we could only work with UK companies and UK businesses. There just simply wasn't any UK businesses and enough UK investors to even make a market. But over the years, we've seen the market grow and grow and grow, and it was such a long time until the liquidity comes up to the point now where we can do a deal like Kraken and have approximately 2,000 investors that qualify with securities laws around the world and are interested in investing in something like this. And really, it's just taken such an awful long time to get there. And now we launched our secondary market, whereby people that qualify to invest could essentially advertise the shares that they wanted to sell to somebody else that wanted to purchase them, and we can put them together in a centralized fashion. Now, part of being able to secure banking and all the things that you need to do means that you need to comply with securities laws, anti-money laundering laws, all sorts of things. And you have to build that into just to get started, to be able to even just the very basics of secure a bank account. And so it's an immensely challenging thing. And one of the thing working on, and why this is so complementary, was firstly we created the first centralized secondary market whereby you could buy and sell some of the largest companies in crypto via some of our special structures that enable that to be possible. And so we launched that into beta. It's still not out of beta right now. But one of the things we always wanted to do, and we were speaking about it for years, right back to some of the really early deals that we were doing with companies like Factum, where Factum were thinking about how you can actually use blockchain technology for kind of notarization, digital assets, and some of the really early ones that were thinking about this. And over the years, we've been thinking how we could do that, but really the technology just wasn't really at a place, and there wasn't really a customer demand for it. And so we could have tokenized all of our equity, but then there was no real compelling reason and point to do it. But now we've reached a stage where several trends are all coming together. One is more and more people are starting to understand the trend of the importance of owning their own assets, self-custody, where more and more exchanges are getting hacked, or challenges are happening there. And also, from the company side, the regulations and the benefits that allow you to achieve consumer protections by not actually risking people's money, by allowing them to hold it on their own. But we're several years ahead, I still think, before that becomes a mainstream thing. One of the first things that I think is great for this is the fact that if Facebook launches their own cryptocurrency and brings 1.7 billion people into cryptocurrency, and then they start learning about Bitcoin and alternatives, and they start learning how to actually secure their own assets, I'm not sure if it's going to work that way. But eventually people are going to start asking those questions, and then more and more people are going to start understanding the benefits from both compliance and consumer protections to doing it this way and cutting out many of the middlemen. So we wanted to disrupt ourselves at Bank to the Future because we're doing it the way that our investors are demanding. But at the same time, we launched the BF wallet so that we could allow people to take out some of their assets as security tokens if they're comfortable going through that process. We also launched our identity solution that takes out many of the compliance challenges, registrations with brokers, KYC, AML, security laws, certifications, all these things that we learn, and allow people to port it across to a platform like altcoin.io that is going through some of these challenges. It's all still early. It's all still not quite ready. But I think the end game that we want to achieve here is allow people to do it in a centralized way which they're comfortable with, allow people to have the option of doing it in a self-custodial way. And as they go through those hurdles and learn these new ways of doing things, I think the end game is that the self-custodial way is going to win. And we're going to see a shift in both privacy, finance, everything to people being able to control their own assets. And I think that's a benefit, a win-win for regulators, companies trying to comply, issuers, and individuals that are looking to protect their privacy, protect their assets. And there's lots of innovation around that. It's a bit early for everyone to do. It's kind of, I always liked Andreas Antonopoulos' early analogies. He's the analogy master. But he always used to say, the internet was invented, and then it took 20 years till my grandma could use an iPad. And I think we're going to see a similar thing, a lot faster, but a similar thing in capital markets. And so by allowing for these really synchronistic, I don't know if that's a word, but you know what I'm trying to say, these models that go side by side, a centralized model, a self-custodial model, and then technology that bridges the gap and allows people to have that choice. And then eventually this model prevails, and we've got that working in a seamless way. That's really the goal of what we're trying to achieve here. And it is such an overwhelming goal. But when we see companies like altcoin.io that were constantly on the edge of that innovation, then that's why we think that this is just a much more likely way to get this technology out there and really have the impact that we think this can actually have.
Yeah, and I couldn't agree more with what you just said, Simon. And that goes back to the quote I was mentioning, where the hardest thing to do is to change consumer habits. And right now, sometimes using a decentralized exchange or a non-custodial exchange for a lot of people can be very confusing. It can seem like there's just a lot of user experience issues that need to be addressed. So by giving users two options, one is a centralized way of trading these types of tokens, but also a non-custodial decentralized version is the best way to go, because if we've seen companies, some large exchanges, most of them start centralized and then gradually move users into the decentralized world. And that takes time. It takes time for the technology to improve. It takes time for people to get comfortable with using these blockchain trading solutions. And so that's why I think the approach that Bank to the Future is taking, by allowing users to not just have one way to trade tokens, but two. So if you want to trade on a centralized platform, you can do that with Bank to the Future. And then pretty soon you'll also be able to trade in a non-custodial way, where you'll have full control of your tokens while you're making these trades. So I think that's a great approach. And that's another thing that gets me really excited.
Awesome. Okay, so things to look forward to is, we're looking forward to developing the BF wallet a lot more, and integrating that with the technology that altcoin.io team have. We can't really too much details, but these are things, the discussions we're having. Taking our identity solution and then allowing people to port their certification, their verification, and all the painful things they had to do to become a customer of ours, and allow them to use that in other platforms in other ways. And then making sure that, you know, we're understanding where these things are going next. And also one thing is keeping an eye on the fact that many of these solutions that a year ago or 2 years ago just weren't possible are now coming to fruition. We now got Lightning, we now got Liquid, we now got the ability to scale on Bitcoin. It's still early stage, but you know, it's a really exciting time. Maybe just before we take some questions, because we always finish on the hour if we can. We've got about 20 minutes to try and get through some questions. Maybe the final thing I've got for you, Andrew, as someone that's been on top of all these trends, how do you see this playing out with all these different blockchains and all these different solutions and protocols? Have you got any hunch or hint on where you think that's all going?
That's a question that's going to put me on the spot. That's a hard one. I think there's a lot of really exciting technology coming out. And when that happens, it's really hard to say exactly what the main winner in that market's going to be. But what excites me most is it seems like every month there's a new scalability solution being released, or there's a new blockchain being released with higher transactional output. But if I had to guess, I would say Ethereum, because the community is large. But I don't want to state a full opinion on that, because my view is there's so much innovation happening. I would not be surprised if a completely new type of technology comes out that blows everybody away, but I think only time will tell. And the key to that is to just stay focused on the technology and stay focused on the industry, and really be able to adjust to the industry as new innovations happen and be able to capitalize on those innovations. So yeah, I'm going to go with, I'm not too sure, but I will say that whichever platform or whichever trading solution gives users the best results, that's the one that we're going to be focusing on.
Yeah, and the only reason I gave you the question is because I didn't want to answer it myself. Yeah,
there's a lot of really interesting technology coming out, and we'll just have to wait and see.
Yeah, but if I'm going to give an answer and do some crystal balling, I'd love to see, you know, the oldest and most secure blockchain be the backbone of this, and you know, Liquid network or something Liquid Lightning solution, building a scalability on top of Bitcoin. I'd love to see that happen. But at the same time, Ethereum definitely has been focused on building a really large development community. But we'll see where that goes. So Irvin, maybe we could head over to some of the questions that you might have pulled out from the live chat, and or maybe from some of the community groups. So Irvin, do you want to fire away some questions? You might be muted right now, but we'll see what we got.
Sure. Okay, so the first question is, what is the difference between the secondary market and Securities Token Exchange?
Okay, well, I'll cover that, and maybe Andrew could add something if he wants to add something to that. So the secondary market is essentially a way for you to place your order. So if you own stock, so for example, let's take the Kraken deal. So anyone that's investing in Kraken right now, we're going to do that via a special company that sits in the middle called an SPV. And an SPV is an investment banking term that simply means special purpose vehicle. And it just means that it's a company that's set up just for holding shares in Kraken, and every shares in the SPV is backed by one share in Kraken. Now, because people aren't actually buying shares direct, we're able to create a market through our model whereby someone, after certain periods, and different countries have different rules, is able to actually place a sell order on our market, which puts together buyers and sellers. But it's not a full-blown exchange. You know, you can just simply take somebody's order. We're not automatically matching or any of the things you would if you were a national exchange. And we've got a very automated process for you signing the shareholder agreement with the buyer and the seller, and facilitating that process to make it much less painful and standardizing. With the secure, but at the same time, with securities tokens, essentially it allows you, we could take that SPV, one token could be issued that backs that SPV or that special company. And then you could take it off and put it onto your BF wallet, for example, where you own the private key. And at that stage, it's no longer, it's held in a self-custodial way. There's still a lot to learn here. There's still a lot of differences, but then at that place, you could then put together through the process of taking your identity, getting a whitelisted address. It then will allow you to trade with other people that are also whitelisted. And therefore, you can do that in more of a peer-to-peer fashion on a blockchain via a cryptocurrency. So it's slight subtle differences, but the two processes essentially, one is centralized, whereby we're facilitating the entire process. But in the security token industry, you hold them self-custody, and we create a way for you to trade with other whitelisted users. It's different experiences and for different people and different types of investors, really. I don't know if you want to add anything to that, Andrew, or we'll take another question.
Yeah, I'll just add, in terms of the non-custodial version of the exchange, the biggest benefit is the enhanced security, and then also being able to control your own funds at all times while you're trading. So there will be differences in how the user experiences work with the centralized version and the non-custodial version. But again, giving traders the ability to choose, I think, is really important.
And also the benefits of that, if you can create a standardized process whereby another registered exchange or different company can actually allow for these assets, and then the two exchanges, so one of the big challenges is a company has to come along and pick Tokyo Stock Exchange, New York Stock Exchange, London Stock Exchange, Shanghai Stock Exchange. But what if it was really easy to go from the Shanghai Stock Exchange to the Tokyo Stock Exchange? And if you didn't like the way something was being done, you could move over to the New York Stock Exchange or the London Stock Exchange. That's one of the, I think, things that doing it in this way via a security token can actually produce great choices for investors and consumers by having these interoperability of different exchanges. As we saw in the crypto market, if you didn't like using Binance or Poloniex or Bittrex, then you could just simply move it across, hedge it with some tether, arbitrage opportunities between the two. That only became possible when there was more and more exchanges and a harmonious way of going between those exchanges. So, Irvin, have you got another question for us?
Yep. What specific parts of altcoin IO tech are you looking to implement?
Well, so really, the altcoin.io currently has a white label solution and is existing. We're not looking to use the white label solution. We're looking to launch a securities token platform using that technology. And we're looking to do some integrations with the part of our ecosystem. So the BnkToTheFuture token, the BnkToTheFuture identity solution, and the BnkToTheFuture wallet. And we're looking forward to seeing how those parts can come together. And I think just to manage expectations as well, those integrations are going to need to be complete. And we haven't fully finished those products on our side. And those integrations are what will allow this to be done in a compliant fashion with different securities laws and around the world. So I think we're looking at least a 2020 vision here. So that's the types of things that we'll be looking at. And we're just really fortunate to be in that position where we do have the BnkToTheFuture token. We do have this identity solution that we've been working on for a long time. And we do have the wallet that's in its infancy. But we look forward to taking that. And, currently they've been, so maybe you got some comments on that, Andrew?
I would just say I think it's a really good approach in terms of bringing the whole BnkToTheFuture ecosystem together by integrating the BFT token and integrating the identity solution. And potentially solving other issues for other exchanges. You mentioned the identity solution, how that could be potentially a gateway for you to go through KYC once and have access to multiple different exchanges. And so I think there's a lot of different ways to take the altcoin technology and really take it farther than, we could on our own as a team. And those products all working together, I think, will build a really, really vibrant ecosystem in the future. So I'm personally really excited to see that come to fruition.
Yeah, and I do remember seeing one of your earlier marketing videos where you were talking about this whole concept of shared liquidity across a network of decentralized exchanges. So I think it's something you guys have been thinking about a lot anyway. So maybe we'll take a couple more questions. Evan?
Sure. Next question is plan on opening crypto to fiat pairs in addition to the security tokens?
So this is a question for, sorry, is it, you were talking about whether we're going to become a cryptocurrency exchange?
Yep.
Or crypto to fiat? Okay, so there's several really interesting opportunities there. Firstly, we're not really, well, I don't have the exact answer to exactly how we want to do that, but there are several opportunities that we can pursue. Firstly, we are primarily a securities business. That's our focus. I think that the cryptocurrency industry has got some very established players. We're investors in many of them. They got a huge head start, and trying to do something in the crypto to crypto exchange, or even the fiat to crypto exchange, is probably not really the best use of our time and where we can have the biggest impact. What we can do, however, is because we are a securities business and we fall under different regulatory guidance and regimes as a cryptocurrency exchange, it brings up different opportunities for things like our banking partnership. So at BnkToTheFuture, we're about to integrate with 35 different fiat currencies and allow people to convert their local currency into dollars and still use the secondary market. Those solutions are about to be launched. As our partners become more and more comfortable with the fact that we're not necessarily a cryptocurrency exchange, but we're building securities using these different protocols, I think it just allows our partners, regulators, and everyone to kind of step by step comfortably move across to these different things. And so I think an important part of that is separating, trying to create a cryptocurrency exchange versus a securities token exchange. There are, however, conversations that we're having with different governments around custom-built, regulations. There's a lot of stuff. You notice I'll be traveling a lot. Custom-built regulations in order to service this market, leapfrog stock exchanges, and go straight to these markets. So we're exploring those opportunities, and one iterative way is we might launch something off the back with providing more liquidity for the BnkToTheFuture tokens, different pairs, and then figuring out how that fits in with the security token ecosystem. But what we don't want to do is mix the two, and it gives us an opportunity to keep those separate. And there's many legal and regulatory reasons why you would want to do that.
All right. Next question. Yeah. Some decentralized exchanges do not require KYC at all. How will KYC work for the BnkToTheFuture exchange?
So for us, we will, through our identity solution, do KYC. I think an exchange that wants to eliminate KYC is going to have to be done the same way that Bitcoin was created. And that is, it's going to be done by probably an anonymous group. Because you just got to understand some of the trends. I would love for governments to not care about money laundering and KYC and all these things because they're no longer these big issues that they care about. But I'm not betting on that trend that governments are not going to care about tax collection in the future. That's not something I'm willing to bet on. and also reversing some of the trends. I think the regulations are going to get harsher and harsher and harsher. What I am willing to bet on, that there is a way of the user eventually owning their own data, and being able to transport that data in a secure fashion, and take out this crazy process of having to do that on every different platform and every different exchange. We're not quite there yet, but I'm willing to make a bet that that could be a part of our future. And at the same time, I'm really, really bullish on those that do want to create solutions that regulate regulators, essentially. So one of the things I really like about Bitcoin is that it keeps the fiat system more honest, because when people have choices of exiting and doing things in a hardware wallet to hardware wallet decentralized fashion, it makes the centralized solutions and even decentralized solutions that are complying with laws in different ways, it keeps them more honest and makes them become more competitive and find better solutions. So I really do believe that that needs to be done. It's just not a part of our goal. It's not something that I think we can achieve, but we'll be looking to support companies and put them on our platform if they're looking to achieve certain goals, and they've got a clever way of doing these things that is still compliant, when you've got a centralized company. If it's not, then that's where the crypto industry comes in, and you do these things in decentralized ways. But yeah, I mean, I don't know what your thoughts are on the whole KYC thing, Andrew.
I would say it's a necessary part of operating an exchange, and I agree with you. If a decentralized exchange wants to launch without KYC, unfortunately, they would need to build it in a very anonymous way. Otherwise, you'll potentially face security violations. I think that's what Ether Delta ran into. A lot of people were really positive that was a decentralized exchange, couldn't be disrupted by any sort of governments, and that turned out not to be true. So I agree with you in terms of the bets that you're making, that while necessarily these are laws that we may not agree with, or ones that make launching these types of products more difficult, they are something that we have to comply with and be really aware of how to navigate the regulatory complexity and really stay on top of it if we're going to be successful here. So I agree completely with what you're saying. It's just a necessary part of the industry. And if you're looking to build an exchange without KYC, it does have to be completely anonymous, and it does need to be done in a way just like how Bitcoin was created.
Awesome. Irvin, so we've got one more question, and then we're going to wrap it up.
Great. One last question. Will we be able to use BFT on the Security Token Exchange?
So we haven't got any announcements to make right now, but the Bank to the Future token is an integral part of all of our thinking in all that we do. And I think the way that we actually navigate that and make sure, one thing I really don't want to do is ruin user experience. And one of the criticisms I had of the whole ICO token market in the early days, you can see some of my YouTube archives, is when people ruin their business model in order to try and shoehorn in a token. The way that we'll be looking to do that, to use these approaches, is making sure that we're constantly thinking about what consumers want, how they want to use it. But at the same time, the Bank to the Future token is an incredibly useful tool for us to have as part of our ecosystem. And so we're always thinking about how we can create more utility and benefits from having the Bank to the Future token. So I think that's probably the last question. Andrew, you got any closing thoughts that you'd like to leave the community with? And it's over to you on final thoughts.
Yeah, I would just say, first of all, thank you for having me. And I'm really excited to see where Bank to the Future picks up where Altcoin.io is leaving off. And I can see that there's a lot of opportunity ahead for the non-custodial security token market. And more than anything, I'm just excited to see where all this technology lands, and really just giving users more options when it comes to trading different types of assets and in different types of ways, centralized and also non-custodial. So really excited for the future and to see what's coming next.
Awesome. Okay, so do let us know in the comments what you think about this new format. This is the first time we've invited another guest to Bank to the Future Live. And so some final thoughts, just so some closing remarks, is do join us on our Telegram community where you can get your questions answered there. The Kraken pitch will be closing soon. Do bear with us. We're trying to get through all the support. There's been a large level of support and some of the verifications that we've got to get through as well. Do leave a comment here and let us know what you'd like to see in the future, what you think of this format, and subscribe to the channel, and make sure you hit that bell so that you get a notification each and every time we go live. And that's going to do it for another episode of episode 18 of Bank to the Future Live. Thank you.